Snohomish County real estate has changed. We were moving along at a great pace, nice little run, and unfortunately the market has slowed down to a jog. There are some people calling that the sky is falling. Oh no, that's not what's actually happening. We're simply seeing a transition happen here in the market. We've seen inventory rise, we've seen days on market go up, and we've seen the number of homes available for sale go up. But in this video, we're gonna go through which cities have had actual price drops and how you as a buyer should be taking advantage of deal season throughout the rest of 2025, what sellers should be considering, and what investors should be looking for. I'm Anton Stetner. I live here in Snohomish County. I've been selling real estate here since 2003. I own brokerages. I've closed thousands of real estate transactions here, and I'm a crazy avid real estate investor. I like digging through this data, and I've done it since 2003, and I share it with you and with our clients. So if you want to understand real estate, the real estate market, and get the insights before the media is telling you 6 months too late, hit that subscribe button so you can go with us along the journey. Now, as we talk about this data, something specific, simply drop it in the comments, or you can reach us at resg.com or Google Anton Stetner, RESG. Give us a call on the phone number. But the reality is we won't have time to get into the nitty gritty. And if you're going to make a buying decision, a selling decision, or an investing decision, we need to get into the nitty gritty of the details. All right, let's talk about the 16 cities that have had price reductions. We're not going to go over all 16 cities in Snohomish County that have had price drops. In the description, we will write out each one, and in the comments, we will pin as the first comment a list of what's happened in every city and every zip code in Snohomish County for you. Once again, we're happy to dig into the specifics. All right, let's look at some data together. Let's talk about Snohomish County as a whole. You can see that year to date, the median sales price is up to $785,000. That's up only 0.9. And year to date, the average sales price is up only 2.7%. Now, when you see numbers like this, what I want you to understand is if the rate of inflation is around 3%, and I'm showing you that Snohomish County has only appreciated 2.7%, it basically tells you that prices are flat. And the real story, though, is that during September, and this happens quite often at the end of the year, but this year has been more pronounced. You see the median sales price being down 2.6%, the average being down 1%. And why is this happening? This is because tariffs are still not all the way solved, although we do look closer to a deal with China. You've got these geopolitical conflicts, wars and things like that. Ukraine, Russia, Gaza, Israel, Venezuela. You've got the government shutdown still happening, and you have the economy appearing to slow. What happens then is the consumer starts to pause, to just wait. And that's why it's still deal season. We feel like deal season is going to continue through the rest of 2025 and expect the spring market to definitely outperform this. Why is the spring market going to outperform this? Let's show you the next specific set of data. For those of you that don't know, the 10-year Treasury is what sets the rate of debt for all mortgages. It also does it for credit cards, student debt, home equity lines of credit, etc. You can take this number right here and basically add 2.25% to it, and that's about what the average 30-year fixed is right now. Well, what's been happening when you sit there and look at this data? You can see it's trending in a downward direction. In other words, debt is in the process of getting cheaper and expected to be cheaper in 2026. As debt gets cheaper, more buyers qualify. As more buyers enter the market here in the Seattle metro, that creates more demand, and we have artificially pitched supply, therefore prices will rise. So expect higher price appreciation in 2026 versus 2025. Also, we said this to all of our investors. We let them know what was happening. We let the buyers know what's happening. And I'm telling you too, so you're in on our little secret. Right before the meeting, so look at this. This is the last meeting. You can see that the 10-year Treasury was under 4%. That's like our magic line. Interest rates at that time, right before the last Federal Reserve meeting, before Jerome Powell came out and gave us the quarter point cut on Tuesday of this last week here in October, rates were 6.1%. And then right after that, they bounced up. What's funny is people will call and they'll say, hey, rates are down because the Federal Reserve just lowered them. The Treasury market is a forward-looking indicator. So it actually makes the rates lower before the event actually happens. It's just like the stock market. People will buy the rumor and sell the news. So what they don't know, they price in a worst case scenario. And then when it becomes a known factor, it pops back up. But notice how it's still sitting lower than it was before. So based on this, expect us to continue trending down and have rates. I mean, I could see them in 5.99, 5.95, 5.875 coming here in the spring. Also, with a slight buy down, you are in the sixes right now. Now we're going to take a look at each one of the cities that is experiencing price depreciation. That's what I said. I'm talking prices are actually going down. And I don't think this is a permanent thing. This is one, seasonality, but two, this is a bunch of factors that is just causing the consumer to pause. And as the consumer pauses, it creates buying opportunities. Specifically here in Lynnwood in the 98087, year to date, minus 6.5% on basically both the median and the average, with the median sales price being approximately $715,000, down 7.1%, the average being $750,000, down 11.6%. That is real depreciation, especially when it shows in the year to date. When it shows up in the data in the year to date range, that's the market actually going down. It can show up in the month on month, but month on month doesn't make a trend. Each month could be a little bit higher, a little bit lower, and you're looking at how they're performing overall. Median is the middle, so that one is less affected by both the highs and the lows. Average is you add them all together and divide by the total, which is going to be more affected by the highs and the lows. And yet Lynnwood was definitely the worst, one that was beat up in the 98087. Monroe, holy cow, on the monthly, on the median, down 20%, almost 19 on the average sales price, between 750 to 781. And year to date, the average sales price down 3.6 and the median basically 0.6. Now remember, if inflation is around 3% and you are at 0 or less than 3%, you are showing signs of not keeping up with the regular prices. So Monroe in the 98272, let's go to the other ones. So we got Everett in the 98203, average price down 1.9 at 738, down 7.3% month on month, September versus September, and the median down 2.7. So Everett in the 98203 showing price reductions. Marysville, basically slightly flat on the year to date, so not keeping up, but wow, month on month down 7.7% and the average price down 1.1. And last but not least, we had good old Stanwood down 21% in the average sales price and the median sales price being down 11.5, year to date down 2.9 and 2.3. Once again, I expect this to not continue into next year. You are already seeing signs that the market is finding a floor. Personally, we're seeing a lot of activity on all the listings we have. We're seeing our social media count rise. We're seeing our listing views rise. We're seeing showings start to go up. So in other words, people are starting to come to terms with this little bit of slowdown that's happening, and the Federal Reserve is currently pricing in even more rate cuts ahead. So for 2026, just to recap this, we expect higher than average appreciation than 2025. We expect inventory to be slightly less than it was in 2025. And we expect rates to be cheaper. If you're a seller, you may want to wait until the spring. We're going to have to analyze your property specifically and where it's positioned inside the market and what you're going to do with the money or where you're moving to be able to make that best decision. If you're a buyer, especially a first-time home buyer who needs negotiation, who needs buy downs, who needs closing costs, we need to be looking at it. For our investors, I'm talking to you. You need to go make some disrespectful offers this winter season. Sasha, our amazing EA that helps me out with a lot of things, she has a comment pinned inside of our chat. It says, make ridiculous offers, make 3 to 10 a week, Get this done. The reason that's there is to hold me accountable to taking the actions that I'm telling you to do. As always, love talking about this. And once again, this is just an overview. So if you want to go through something specific, drop it in the comments. Go look for the numbers for all of the cities and the zip codes there in the comments, and let us know how we can help you with real estate here locally.